Welcome to this chapter over federal tax considerations for health insurance. One thing to keep in mind as we go through this chapter is what you're going to need to separate or be aware of when you're reading your test questions is you need to know who is paying the premiums on something to know how a benefit might get taxed, because that will determine all of it. Who pays the premium to know how the benefit is taxed. So let's go ahead and jump on in first to personally owned health insurance. Once again, taxation of insurance benefits is often determined by whether or not the premiums were taxed. And when we talk about health insurance benefits, one thing you really need to understand is that you are not taxed on your health benefits. Your health benefits are when you go to the doctor, get a prescription, go to the dentist. Those are your health benefits. So just make sure you understand you are not taxed on health benefits. Now, on individually owned disability policies, the premiums are paid with after-tax dollars. They are not tax deductible because any benefit received will always be tax-free. So the insured paid the premiums and the insured gets the benefit. Medical expenses, once again, you're not taxed on your medical benefits. You may have a question about when are your expenses tax deductible. They could be tax deductible when all of your expenses plus all of your premiums paid that year exceed 10% of your adjusted gross income. That's when you can itemize and deduct them on your taxes. Now on group disability, get it through your employer. It will depend on who pays the premium to know how a benefit is taxed. Some terminology you need to be familiar with. First, if it is non-contributory, that would mean the employer is paying all the premiums. If the employer paid all the premiums, any benefit received by the employee is fully taxable. Now, if it is fully contributory, which means the employee is paying all the premiums, it's fully contributory, well, the premiums paid by that employee are not tax deductible because any benefit which would be received by that employee will always be tax-free. Now let's muddy the waters with partially contributory. How about if both the employee and the employer pay part of the premium? Well, the portion of the premium paid by the employer is deductible as a business expense, part of running their company, which means any benefit that is attributable to that employer's premium is taxable. The portion of the benefit received by the employee that is attributable to the employee's premium will be tax-free. Now, sole proprietors and partners can deduct up to 100% of their medical plan for them and their families. However, not to exceed their earned income. So they cannot deduct more than they make. Next is a key person and buy-sell agreement. A buy-sell agreement is set up by business partners. So the premiums would be paid either by the business owner on a key person policy or the business partners on a buy-sell agreement. And they are not deductible as a business expense because any benefit would be received by the business owner in a key person policy or a business partner in a buy-sell agreement will always be tax-free. Next, there are some different ways to help employees save for their qualified medical plans. There are health reimbursement accounts, or HRAs, which consist of funds set aside by an employer to reimburse an employee for their qualified medical expenses. Since it's the employer's money, the employer sets eligibility requirements, who can participate, full-time employees, part-time employees, or both. And they also get to set contribution limits, how much money can be set aside. It's their money, so they get to decide that. The benefit of this that you need to know for your test is it allows companies of all sizes to offer this type of benefit. So small employers can compete with larger employers as far as the benefits they provide. Next, we have flexible spending accounts, or FSAs. A flex spending account is a form of a cafeteria plan. All that means is you get to pick which benefits you want from within the flex spending account. For testing purposes, there are two types of flexible spending accounts. First, there is a healthcare account to help you save for your qualified healthcare expenses. Then there's a dependent care account to help you save for dependent care expenses. You get to choose, do I want the healthcare account? Do I want the dependent care account, or do I want them both? That's why it's called a cafeteria plan. Now, the IRS does set limits to how much money can go into each one of those accounts. You do not have to know the limits because they change every year. However, you do need to know that if it comes down to the end of the year and you haven't used all the money in your flex spending account, you lose it. So the flex spending account is a used it or lose it rule. The money will not carry over. Now, in a health reimbursement account and also in a health savings account that we're going to talk about, if you have any money left at the end of the year, it will continue to carry over and accumulate. So speaking of a health savings account, consists of funds set aside by both an employer and an employee, so it could be both of their monies. IRS has set limits, don't have to know the limits. However, you do need to know that if the employee uses the money in their health savings account for anything other than a healthcare expenditure, let's say they want to go out and buy a boat with that money, then there's a 20% penalty plus tax. Now that's only up to age 65. Now after 65, if they want to use that money and go buy a boat, the 20% penalty goes away and it's just treated like income. But please make sure you know prior to 65, it's 20% plus tax. And this next one is word association, high deductible health plans. All you need to know for your test is that your HRAs and your HSAs are linked to high deductible health plans. So if an employer has a high deductible health plan, you can use the funds from your HRA or HSA to help meet that deductible. All right, that is it for this chapter over federal taxation. Please make sure that you watch the video that is included here that we've made for you to kind of explain it a little bit further. But we'll see you on the next video.